What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down some of the very important things that Jerome Powell said that are affecting the markets and break down whether or not this pump is going to last or are we truly going to get a big reversal. I'm also going to break down why tomorrow is going to be a massive day, one of the biggest days of this entire quarter, because we have some huge earnings from the giants, and I believe they're going to play a very big role in whether or not this rally continues. Now, before I break anything down about the rally, before I talk about what's going on with Tesla's share price, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo and deposit no money, if you simply sign up, you're guaranteed one free stock. If you put in $100, you're guaranteed 5 free stocks. And if you put in $1,000, you're guaranteed 15 free stocks. You'll get free level 2 data, which is very helpful when you're trading and etc. with $0 commissions in trading. So please check it out if you want those free stocks. The offer ends in just 2 weeks. With that out of the way, let's get on with the video. So anyways, guys, we had a crazy day today. It was wild. And Jerome Powell ended up doing something I did not expect. But I did mention to everyone, okay, that I expected a rally in the markets for Wednesday. I said we would likely get a big push up off the rate hike decision. And then I mentioned to you guys there could be a delayed reaction to Powell. But I was under the impression that Powell might be quite hawkish, right? And he ended up not being that hawkish. So now there is a possibility for the market to continue with the pump, but that's going to depend heavily on earnings. And I'm going to break all of this down. So I mentioned in a previous video that this could be a massive trap forming as the market got this big pump. And right now, just like historical trends, hold on, right here. Right now, smart money has no confidence in this pump. And dumb money is so confident. They're the ones who are buying up like crazy. This does not guarantee anything, right? Smart money, there have been times where they're wrong. There have been instances where they're also wrong. They're not always perfect. But I just want to note this divergence that is still, forming right now. So now the real question is, what is the market going to do? All right. Now I mentioned to you guys two important things. On SPY, okay, I anticipated SPY to get and peak between 406 to 410 today. That's what I thought would happen because 410 is major resistance. I told you if we break 410, there's an increased probability of this thing continuing to push. But we can't confirm it until we get the big earnings. All right, so I'm going to break this down in a little bit more detail, talk about how this could affect Tesla, but I also want to talk about the Fed. I'm going to really focus on the Fed right now. Jerome Powell was not a mega bull. He actually wasn't. He said some things that were actually kind of hawkish, but other things he said were actually kind of dovish in a way. I would say dovish and also very optimistic for the future and for a soft landing, at least in his words and his opinion. So here's a recap of some of the big things he said. At 2 o'clock p.m. Eastern Time, Jerome Powell and the Fed, they ended up raising the terminal rate by 25 basis points. Okay? Just like what we expected, I told you guys that 50 basis points was possible. If they gave us 50, the market would have crashed, but they did not, and that was unlikely. So 25 basis points came. The market actually was trading sideways and a little bit red when it ended up coming out. Then when Powell was speaking, the market came down initially, and then we got a big pump and the market turned very green. We got a huge pump actually. So now let's talk about some of the things he said. He first talked about the labor market. He said the labor market is still relatively strong. He mentioned the fact that we are seeing, a lot of jobs coming out. There's still lots of jobs available, and there are some signs of the tightening that are now starting to show, but they're not as huge as many people would have projected. And he also noted that we're going to see more signs of the tightening over the next couple of months. He mentioned we just need more time. He also said something that's not very I would say like good for the bulls, and that's the fact that we should not expect any rate hikes in 2023. None of the Fed members are actually expecting it. So they're going to be continuing to raise rates. I will get in on that a little bit later, but they're going to continue raising rates and keep them high. As of right now, it's planned for the entirety of 2023. Powell said, and I quote, given our outlook, I do not see us cutting rates this year if our outlook comes true. So there's no plan to cut rates. The Fed is not pivoting this year. There's no pivot as of right now, or like a true pivot where they start like cutting rates. That's not going to be happening. So this actually would not be the best for the market rally. But Powell ended up saying things that were quite dovish in a way. He was actually asked if the Fed would just start pausing in the month of March, and Powell ended up kind of avoiding the question. He didn't say that they will or they won't. He said it would depend on the data, but he also said that the Fed is still going to be fighting inflation. It's still not where they want it to be, and there's a lot of work to still be done. And he did mention that they are likely going to continue to raise rates, right? They're not going to pause this. I mean, they're not going to, sorry, cut rates this year. They're not going to decrease them, but they are likely going to pause relatively soon. He kind of implied that. We just don't know exactly when yet. They did decrease the rate at which they're increasing rates. Instead of 75 basis points, we got 25. And that is part of why the market was a little bit more confident. Then Powell said something very unexpected. He said there's going to be growth this year. Now, one of the major inflationary measures would be the GDP growth in the USA, quarter over quarter. And when you look at a recession, okay, there tends to be two negative GDP quarters. And Powell is saying for the whole year, we're going to have positive growth. So he's implying there might not even be a recession, at least based on the GDP requirement. He's implying that. Is he right? I can't say that. In fact, it really depends on many factors. I actually doubt that, but that's what Powell is trying to say. I have very experienced friends in the stock market. I believe we're actually in a recession right now, and there's going to be some extreme pain. Different people have different views, but he's still pushing, and I'm referring to Jerome Powell, he's pushing this narrative that the soft landing is still going to come. How interesting is that? That's very, very interesting. I also want to note that Powell then ended up saying that there's a possibility that the Fed funds rate stays below 5% or at 5%. Once again, hinting at a potential pause soon. We don't know for sure, but we have to wait and see. He also mentioned that disinflationary process has started. There is a disinflationary process. Once again, the market loved to hear that. They love to hear the soft landing. But he also said it's premature to declare victory, and there is still a lot of work to be done. They're going to continue to tighten. He still said things that which are kind of hawkish, other things that are quite dovish in a way. And at the same time, he was still very optimistic. Besides that, let me see what else I forgot to mention. That's basically the majority of it. They're going to remain very, very stern in a way. They're still going to continue to raise rates. Uh, it's still early to say that we've won, and they are going to remain restrictive in policy, as Powell stated. So yeah, that's pretty much the main sum of it. I want to note the fact that there's no confirmation that inflation is gone, and now that's making me a little bit curious about another possibility. So, what's happening is, I mentioned to you guys that earlier, a lot of these shorts ended up piling in and they started buying puts, and they were expecting Powell to be hawkish. In fact, even I expected him to be even more hawkish than how hawkish he was. And I'm saying that because when I look at the data, which I'm going to make another video about that later, but when I look at the data, lumber is going up and it went up pretty hard. Egg prices, food is going up pretty hard, at least for the month of January. We saw big growth, big increases in prices. It makes me wonder, okay, the market is acting like, okay, there's going to be a soft landing. The Fed is near its pivot, or not near its pivot, but near its pause. Things are going to be fine, right? But the problem is, what if the data doesn't show that during the February CPI report, which is going to be for the month of January? What if by the 14th, something changes, right? The market has to be very, very ready for that because that could shock the market big time. And I'm kind of speaking ahead of myself when I say that, but I just wanted to know you guys have to be prepared for anything. Now let's talk about what I expect to happen. Well, the first thing you have to note is the fact that let's look at the current trend. The market made a big move, and right now SPY is overbought. RSI is over 70. Now, is the trend bullish or bearish as of right now? Yes, it is a little bit more on the bullish side. We did see this nice crossover on the MACD. We do have some bullish momentum, but when we make such a big move in little time, the market tends to actually come down a bit to cool off its RSI. So I believe the market's going to have a bit of a cool off tomorrow, just a small one. It doesn't have to be that big. I think SPY might come down to like 407, 406, or somewhere around there, get a bounce and maybe close very flat. I don't expect way too much. We could even close a little bit red. Completely fine for both the bulls and the bears. Don't worry too much about tomorrow by the time the market closes. What matters is the after hours because then we have Amazon's earnings, we have Apple's earnings, we have Alphabet, aka Google's earnings, we have Starbucks, we have Sony, we have massive earnings tomorrow. These are the giants. They will dictate the entire market. The market's going to make a big move depending on Apple and Amazon. And I want to note that Meta ended up closing and they actually missed to some degree on earnings, but the stock price soared to the moon because they ended up announcing a buyback, share buyback, and it really helped the company. So you have to watch out for things like that. If their earnings lead to positive effects for the stock prices, then the whole market could pump. If not, at the end of the day, the market could still reverse. So we have to be very careful with that. The technicals are still telling me that we have this potentially bearish divergence developing on SPY, but it could still be developing. It could still, continue to develop for another week or so. I can't promise the reversal starting just yet, especially because we broke 410, major resistance on SPY. We used to actually get rejected every time we touched this 410 area. We'd get rejected, we'd come down pretty hard. We managed to break it. So there is a good possibility for a bullish continuation, but it's going to depend heavily on earnings. That's what's going to be the most important thing for me. In my opinion, we're going to have a pullback tomorrow in the whole market. Maybe Tesla comes down a little bit. I think the market's going to pull back a little bit just to cool off. And then we're going to react to earnings. If Amazon and Apple do, and Google, Alphabet, and all of the big dogs end up doing really well, and the share prices start soaring, SPY could take off, break resistance, break 416, then 419 around there and fill its gap, get closer to 420. If that happens, Tesla could fly to like 200. That's actually very possible. But if they miss on earnings and they end up coming down, Tesla can also come down. Then we have a lot of these gaps right here to watch for. Okay, so as traders, we have to be able to adjust. I told everyone that I believe the market would get a nice pump because of FOMC. I thought we could come down a little bit depending on Powell, and we'd likely see downside for Thursday and Friday. I still stand by some potential downside maybe for Thursday, but like I said, now it depends on earnings because Powell was not as hawkish as I thought he would be. Now, the bearish divergences I saw are still valid, but they could still also be developing because it's kind of like, okay, the divergence could play out immediately and show a big reversal, or it could keep developing as the market keeps pushing up and then we get the reversal. But I do believe a reversal will come in the market soon. It may take a couple of weeks or it may start as soon as, tomorrow after the market closes. I can't promise anything just yet, right? We have to wait for earnings. Now, let me talk about some possible formations on Tesla stock and also some other big things before I end up closing this video. I want to note that the QQQ did end up filling the gap exactly like I predicted. I told you guys the QQQ would probably fill its gap and maybe push a little bit. I was thinking it would stop around this 298 area. And at the highest, I saw like 300. It ended up breaking to 303. So that's very bullish, or that's potentially very bullish unless earnings end up causing a reversal. But as of right now, the QQQ will be dictated by Apple and Tesla in particular. Now, I also want to note that as of right now, the RSI is overbought. QQQ is going to likely come down and cool off a little bit first before any continuations. But just remember, this will affect Tesla and the whole market, and we are still counting on earnings. Now, I also want to note another possibility, and that's the fact that if the market does pump, if we keep pushing up, remember, we have another CPI report in less than 2 weeks. If the market is holding these levels, and if we're still doing okay by then, we could be in for a shocker because there's an increased probability that CPI is going to be hot when it comes out in February, I think on February 14th, which is Valentine's Day. So just be very careful. But until then, the first thing would be the earnings. Looking at some other big things, looking at NASDAQ, man, this thing is breaking out as well. But like I said before, it's going to depend heavily on earnings. The VIX actually broke below the $18 level, the support right over there. Very, very surprising. I didn't actually expect it to come this low, but still, it is what it is. And now we're actually seeing implied volatility drop on SPY. So it is at an extreme value, or at least an extreme for the year 2022. If it keeps coming down, I'm going to be watching 17.5. It might bounce a little bit tomorrow before we see this thing pick a direction, which is going to depend heavily on earnings. I also want to note that a big move on SPY to the downside could lead to a big increase in implied volatility. Looking at Apple, okay, this thing is looking pretty nice in my opinion. We actually got rejected off a major resistance zone. That's that 146 level. If I do expect Apple to come down just a bit, but then going into earnings, if it does get the big breakout, I'm going to be watching that 150 plus area. It could get a very, very nice move. But if it ends up coming down, there's a lot of room for it to come down. We're actually pretty high compared to our low. It could start testing these lows again if earnings is really bad. So we'll just have to wait and see. I'm not picking any direction as of right now. I'm open to anything, and I'm going to be very reactive based off what the trends tell me. And I'm always ready to secure profits. I'm not going to bag hold anything, especially in a market like this. I'm very careful. The dollar is basically flat, still in the 101 area, not really much going on yet. It could have a breakout later, but we just have to wait and see. The 10-year treasury yield, it kind of surprised me. It's down almost 4%, and now it's getting very close to this support zone right over here. Now, if this thing does, it actually ended up filling its gap down here. So now it should bounce very soon if there is going to be hope for the bears. If it doesn't do that, if this thing ends up breaking this support right here, this would be a bullish signal for the stock market and not the best for the bears. Finally, the last thing I'm going to talk about is, let me see. I think that's about it. So now I'm just going to end with Tesla. Tesla ended up breaking 180. Very interesting to see. That's a good sign as of right now. For tomorrow, and to open, if the market gets a pullback, Tesla could actually come back down to this 180 level, maybe come a little bit lower. We could see it get to the high to mid 170 area, then get a bounce off that. I expect it to be a little bit flat tomorrow. I don't expect it to make too much of a big move, but we could still close very close to 180, very flat. We're going to react, in my opinion, to earnings. So be ready for that when the market closes. That is going to determine whether or not Tesla is going to start pushing up high. The whole market pushes high. And if Tesla could get all the way up to $200, it is still possible. But if earnings are a big miss, if they're very, uh, you know, horrible in a way, if they end up coming down and causing Apple and all of these stocks to come down, Tesla could also come down, and you'd have to watch these gaps. You'd have to watch previous support zones very carefully. So I'm just warning everyone in advance. Please be ready, do what you have to do, and I will upload another video about all of this tomorrow. I might be a little bit late because I'm going to wait for all of the earnings results to come out. It's going to take maybe many minutes, maybe another hour or so after the market closes. So I will record this video a little bit later, or I'm sorry, the video for tomorrow, and then I will inform you guys about what I do anticipate. So be on the lookout for tomorrow. Please remain calm, cool, and collected and get ready. Sometimes unexpected things can happen in the markets. The majority of people were probably expecting Powell to be more hawkish, and he could have been hawkish. He could have said things. He could have been much more hawkish than this if he wanted to bring the market down. He could have done that if he wanted to. He chose not to. And it's also because of other factors. I could actually talk more about those later, but we just have to be prepared for anything. And as investors, always be adaptive. Not financial advice, by the way. Thank you for listening. Have a great day, guys. Get ready for tomorrow. Massive, massive day. One of the biggest days of this entire quarter. And I'll see you guys in the next one. Tesla to the moon, because the long-term future is still incredibly bright. And peace out.